you need to focus on oil prices. Now let's move on to Australia. Australia's commodity-driven economy mines a lot of natural resources and imports a lot of natural resources. Okay, it is a very, very large island. It is so large that it is itself a continent. Its major industries are agriculture and services. This is an export-driven country, not an import-driven country. Who is its major trading partner? It is China. So when China's data is good, Australia's situation is good. When China's situation is bad, Australia's situation is also bad. Now, what do we have? The Royal Bank of Australia. This is its central bank. It sets monetary policy. It has three major goals: to keep the Australian dollar stable, to support economic growth, and to maintain full employment. Alright, the other two had two each. Someone had one, but its third goal is to keep the Australian dollar stable. It also keeps an eye on the dollar. It wants to keep inflation between 2 to 3% per year. That is the target. What is the tool of the Reserve Bank of India? It increases, decreases, changes the interest rate, changes it. Or open market operations, buying and selling of government bonds through which they control the money supply. Now know its story. The Australian dollar is nicknamed a commodity currency, meaning it's influenced by the prices of commodities like gold. Now gold is mostly mined and manufactured in Australia, so its rates matter a lot for it. It is often used in carry trades due to its relatively high interest rates. Australia's interest rates are often high, so AUD JPY is frequently used in carry trades. The AUD is the most active during the Asian trading session. This has the most movement during the Asian session. Tassie can be affected by weather news, weather events, as Australia's economy is sensitive to droughts, other natural disasters. In Australia, wildfires occur very frequently. Some wildfires last for as long as 2 months. Then droughts, famine, all these things have a big impact because it has a very large agriculture industry. It imports meat, chicken, milk in the world. Its focus is more on meat and chicken. Now, who sells more milk? We will come to that as well. Now, what are its economic indicators? We have the CPI, Consumer Price Index, which measures inflation in Australia. Balance of trade shows the difference between Australia's exports and imports. GDP measures the overall size and growth of the economy. Unemployment rate measures how many people are out of work. What makes the Australian dollar jump? Economic growth and interest rates. Strong economic growth and interest rates tend to support the Aussie. As discussed, the Chinese economy is a major trading partner. China's economic performance significantly supports the Australian dollar. Then New Zealand's data. You discussed that the US and Canada's economies are correlated. The UK and Eurozone's economies are correlated. So now Australia and New Zealand's economies are correlated. Economic data from New Zealand can also influence the Aussie as their economies are closely linked. How to trade this pair now? You deal in amounts of dollars. $100,000 is fine. Its pip values are calculated in dollars, and you should have enough dollars in your account to trade it. Now, what strategy should you use for this? You need to keep an eye on economic data on Australia, China, and New Zealand. Keep an eye on international commodities and keep an eye on gold, and you can also use such crosses. Using crosses like AUD, JPY, AUD, NZD to get a broader sense of Australia. Now, AUD, NZD is an interrelated economy. If AUD, NZD is rising, it means Australia's economy is doing well. If AUD NZD is falling, it means Australia's economy is weakening. Now we come to the biggest milk exporter, New Zealand. Facts about the weak economy, but it is an open economy. Using the New Zealand dollar is its currency. What is the geography? It is also an island in the South Pacific Ocean. What are the biggest industries? Agriculture, dairy and meat, tourism, and some manufacturing. Trade export-driven economy. Who are its major trading partners? Australia, China, and the US. The Reserve Bank of New Zealand is its central bank. What is its goal? To keep inflation under control. That's its only goal. The RBI's control is just to keep inflation under control. They have a target of 1.5% for inflation. The RBNZ governor has a strong incentive to meet the target, as the government can remove them from office if they fail. If inflation does not come down, the government can suddenly remove them. When we discussed, it cannot influence other countries. The central bank had a little influence in the Bank of Ghana, influenced by the Ministry of Finance. But here, the government can just click and fire the person whenever it wants. RBNG uses these tools. What is this tool? Official cash rate, ORI, interest rate that they charge. Interest rate, basically open market operations, buying and selling government bonds to control the money supply. The story of the Kiwi, the New Zealand dollar, nicknamed the Kiwi, is a commodity currency, meaning it's influenced by the prices of commodities like dairy and meat. Now, what is its main export? Dairy and meat, so their prices make its currency weak and strong. It's closely tied to the Australian dollar. Australia is New Zealand's biggest trading partner. Like Australia's Kiwi is often used due to relatively high interest rates. Its interest rates mostly remain high, so it is used in carry trade. The Kiwi can also be affected by weather events because agriculture, as we discussed, depends on the weather and becomes very vulnerable. When there are droughts, natural disasters, or wildfires, they are inevitably affected. What are these economic indicators? We have the GDP, which measures overall growth and size. We have the CPI, which measures inflation, and New Zealand's balance of trade. This difference shows between New Zealand exports and imports, economic growth boosts its position. The more exports increase, the stronger its position will be. Commodity prices will also support the Kiwi. Especially dairy and meat for the Australian dollar's performance can also influence the Kiwi. Because if Australia's economy is strong and the dollar is getting stronger, New Zealand's economy will automatically become strong. So it will definitely support it and will be weak against the Swedish dollar. But overall, it will improve its conditions. How to send it to the industry is also traded in contact. Papers are also calculated in dollars. Traders' accounts should always have money to cover this trading, and since the value of the Kiwi is low, it requires a low margin. To trade it against the other pairs, now how to trade it? We have to keep an eye on the economic data of New Zealand and Australia along with it. Commodity